The ASX is down 7.4%. $137 billion were wiped from the value of the market. The price of oil is down 30%. The Australian dollar had a flash crash and dropped below 64 US cents. It's because of the coronavirus and a crude oil price war. But where will it end? And what does it mean for your super? The Australian share market has now fallen 20.1% since the peak on February the 20th, which means it's officially a bear market. And all but 2 weeks of last year's gains have now been lost. Share prices had been tumbling for 2 weeks because of concerns about the coronavirus and its impact on the global economy. But today, they drove over a cliff. And here's why. Today, the oil price plunged 30%. Head of Commodities Research at NAB, Lachlan Shaw, explains why.
Russia and OPEC failed to agree on a deal on Friday to cut production. The result is that Saudi Arabia declared on Saturday they're going to a price war. They cut the price of Saudi crude into all their customers by the largest amount in more than 20 years, and they've talked about boosting output to capacity.
As a result, the biggest falls on the local share market today were oil and gas producers. Oil Search a stunning 35% down. Santos 27%, Woodside 18%, and Australia's biggest company, BHP, down 14%. Banks and industrials weren't spared either. The silver lining of the oil price crash is that petrol prices are coming down. They've already fallen about 18 cents a litre on average, and that's going to provide some much needed economic stimulus on top of whatever the government announces later this week. At lunchtime today, markets were also shocked by what's called a flash crash by the Australian dollar. It dropped from 66 to 64 US cents in a few minutes for no obvious reason. And finally, what does it mean for your super? Kirby Rappel of Lonsec explains that older, more conservative super fund members are better off than younger ones.
For those younger members in those sort of growth funds, they're down around 6.5%, 7%. For people in those balanced funds that are probably where a lot of money is, that's probably about 5.5% down. But the really pleasing story, I think, is for those more, those members closer to retirement, their balances are probably down 2 to 2.5%.
It's another reminder that investing can be like a good marriage, for better or worse, for richer, for poorer, in sickness and in health. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.